Hey, what's up everybody? It's O. 2025 is here and with it comes a question every investor faces. Should I put my money into stocks or cryptocurrency? Both are powerful wealth building tools, but each has its own risks, rewards, and opportunities. In this video, we'll break it all down, so you can decide where to put your hard-earned money this year. Let's get into it.
Stocks have been the go-to for anyone looking to grow their wealth for decades. You buy a piece of a company, and if that company does well, you do well. Simple. But in 2025, the game's a little different, a little more high-tech. We're talking artificial intelligence, companies like Tesla in the electric vehicle market, and the healthcare industry transforming. These are the sectors to watch. Stocks offer relative stability. Think of it like owning a rental property. It's a long-term play. You buy it, you hold it, and over time, that property or that stock appreciates in value. And hey, let's not forget about dividends. Some companies actually pay you just for holding onto their stock. Historically, if you look at the S&P 500, it's delivered returns of around 7 to 10% annually over the long haul. Not bad, right? It's that slow and steady approach that has made millionaires out of everyday people. But here's the catch: it is slow. Those significant gains, those usually take years, sometimes even decades to materialize. For those who value predictability, stocks are still a solid option in 2025.
All right, now let's talk about the wild side of investing cryptocurrency. It's a realm where fortunes are made and lost in the blink of an eye. We've all heard the stories, right? The tales of overnight millionaires and the dramatic rise of digital currencies. The people who threw a couple $100 into Bitcoin back in the day and woke up one morning as millionaires. It's the stuff of legends. But is crypto still a gold mine in 2025, or is it a ticking time bomb waiting to explode? The truth is, it's a little bit of both. The potential for high rewards comes with equally high risks. The crypto space is growing up, maturing. It's no longer the wild frontier it once was. Governments are finally starting to figure out how to regulate it, which, believe it or not, is a good thing. Regulation can bring order to the chaos. It brings a level of legitimacy and stability to the market. Investors can feel more secure knowing there are rules in place. And you know who else is starting to see the potential? Big institutions, Wall Street guys in suits. They're not just watching from the sidelines anymore, they're dipping their toes into the crypto waters, and that speaks volumes about where this market might be headed. Institutional interest can drive significant growth, but let's be real. The potential for explosive growth is still the biggest draw. The idea of turning a small investment into a fortune is incredibly enticing. Bitcoin, the OG cryptocurrency, is often called digital gold for a reason. It's the pioneer, the one that started it all. It's scarce, it's decentralized, and it's a hedge against inflation. In a world of economic uncertainty, these qualities are highly valued. Then you've got Ethereum, which is more than just a cryptocurrency, it's a whole ecosystem. It's a platform, a technology that's revolutionizing industries with its blockchain technology. Smart contracts, decentralized applications, the possibilities are endless. And let's not forget about the world of NFTs, DeFi, decentralized finance, and all the other crazy innovations happening in the crypto space. It's a hotbed of creativity and disruption. It's like the Wild West out there, but with the potential for massive rewards. The landscape is constantly evolving. But here's the flip side: volatility. The market can be incredibly unpredictable. Crypto prices are like roller coasters on steroids. One moment you're up, the next you're down. You could see your investment drop 50% one week and then skyrocket 200% the next. It's a wild ride. If you're bold, informed, and willing to stomach the ups and downs, crypto could be your ticket to life-changing wealth. But remember, it's not for the faint-hearted.
Okay, so we've got stocks, the reliable workhorse of the investing world, and crypto, the flashy new sports car. Stocks have been around for ages, providing a steady and predictable ride, while crypto is the new kid on the block, promising excitement and high-speed thrills. Both can get you where you want to go, but the ride is going to be very different. Stocks offer a more traditional, stable journey, whereas crypto is all about the adrenaline rush. Let's break down the key differences. We'll look at risk and reward, regulation, and time frame to help you understand what you're getting into. First up, risk and reward. This is where the two really diverge. Stocks are like that comfortable pair of shoes. They're not gonna wow anyone, but they'll get you from point A to point B without any blisters. They offer a sense of security and predictability. They're safer, but they're slower. Think of them as the tortoise in the race, slow and steady wins the game. Crypto, on the other hand, is like strapping yourself to a rocket. It's thrilling and can shoot up in value overnight. The potential for massive returns is there, but so is the risk of crashing and burning. The volatility can be nerve-wracking. Next up, regulation. Stocks are like that friend who always follows the rules, always plays it safe. They're governed by strict regulations. They're highly regulated, which protects investors but also limits potential upside. This regulation ensures a level of trust and stability. Crypto is still the rebellious teenager, pushing boundaries and testing limits. It's a space that's constantly evolving. Regulations are catching up, but it's still a bit of a wild west out there. And finally, time frame. This is crucial for planning your investment strategy. Stocks are a long game. Patience is key here. We're talking years, even decades, to see substantial growth. It's about building wealth over time. Crypto can make you rich quick, or it can wipe you out just as fast. It's a high-risk, high-reward game that requires a strong stomach.
Here's the thing. You don't have to choose just one investment strategy. You don't have to put all your eggs in the stock basket or go all in on crypto. Diversification is key. In fact, the smartest investors I know, the ones who are building real, lasting wealth, they understand the power of diversification. They spread their investments across various asset classes. Think of it like this. You wouldn't eat pizza every single day, right? Variety is essential. No matter how much you love pizza, you need a balanced diet to stay healthy. The same principle applies to investing. Investing is the same way. A balanced portfolio is crucial for long-term success. In 2025, a smart portfolio is a diversified portfolio. It includes a mix of different asset types. It's about finding that sweet spot between stability and growth. Balancing risk and reward is essential. For stability, put 60 to 80% of your investment capital into stocks. This provides a solid foundation. Index funds like the S&P 500 or ETFs that focus on AI or green energy are solid picks. They offer broad market exposure. They give you broad exposure to the market without putting all your eggs in one basket. This reduces risk. Now, for that growth potential, allocate 10 to 20% to crypto. This adds a layer of innovation to your portfolio. Stick with the established players like Bitcoin or Ethereum. They have a proven track record. This way, you're protecting your wealth with the stability of stocks, but you're also keeping a foot in the door of innovation with crypto. It's a balanced approach. It's the best of both worlds. Diversify for success and watch your wealth grow steadily and securely.
So there you have it, guys. Stocks and crypto, they're not enemies. They're just different paths leading to the same destination, financial freedom. The key is understanding which path aligns with your risk tolerance, your goals, and your investing timeline. Remember, the best investment you can ever make is in yourself. Educate yourself about the markets, stay informed, and don't be afraid to ask questions. There are tons of resources available online, from financial blogs to YouTube channels like mine, that can help you become a smarter, more confident investor. Whether you decide to go with the stability of stocks, the high-risk, high-reward world of crypto, or a combination of both, the most important thing is to have a plan. Don't just throw money at something and hope for the best. Do your research, understand the risks, and invest wisely. Thanks for watching, and I'll catch you in the next one. Alright guys, that's it for this video. I hope you found it helpful and informative. Remember, investing is a journey, not a sprint. Don't forget to do your own research, stay informed, and never invest more than you can afford to lose. Thanks again for